Hello guys and welcome again. In today's video, we'll be talking about the finance tab in the MikesBikes business simulation. For this case, this is the advanced one. And to start us off, you can see that this is my finance. Here we have equity, debt, dividend, investor PR and reports. When you look at equity, here we have these terms. So I'll just give you an explanation of some of the terms. The book equity, this is based on the issue price of the shares and is the dollar figure in the balance sheet. Then the market equity, we can just refer it as the market capitalization. This is the market value of your currently issued shares. So let's say if you have 2 million shares and a share is $6, then your market equity will be 12 million. Then the debt to equity ratio, you see that your firm to debt equity ratio, when you have the higher the debt to equity ratio, the higher the debt levels of your company, of your MikesBikes company. And this will pose a higher risk to investors and it will also lower your shareholder value. The number of shares, this is just the total number of shares in your MikesBikes company or the number of shares your MikesBikes company has issued. So that's why you can see it is down here. Then dividend, sorry, it's a payment by company to its shareholder once they start getting profitable, and just to give them a return of the investment. So in our today's video, you see, for you to purchase the standard capacity units, normally referred as the SCUs, or you want to increase your capacity for your MikesBikes company, you must have enough funds. You can therefore raise capital through various means. If you need funds, you can come here. You can either issue shares and increase the long-term debt. You can just raise the long-term debt to just put here a figure. So in terms of issuing shares, you can issue the amount you want. So let's say I want to issue 10,000 shares or 1,000 shares, then I'll click apply. You can see that it has saved. So I've issued 1,000 shares. So I'm raising enough, I'm raising capital. But the issuing of long-term shares and the issuing of shares will have various effects on your MikesBikes company. This can either dilute your ownership and it will lower your earnings per share, and also it can decrease the shares of the company. Then again, you have the long-term debt. You can either raise the amount that you need. So for this case, let me say I want to raise $1 million because I want to raise $1 million. So in terms of no, this is 100,000, sorry. So let me just so let me say I issue 1 million. So this is I issue 1 million. I raise 1 million. So if I raise 1 million, you see that although I'll have enough funds to finance my standard capacity units and increasing my capacity, you see that increasing the long-term debt or raising the long-term debt will influence the annual interest payment and this payment interest. And also, it will increase your debt to equity ratio and therefore it will reduce your shareholder value. The advantage of taking long-term debt is that it can be paid anytime, no matter the amount that you have. But if you take a long-term debt, you can repay it anytime you wish and any amount you want. So another case is that if you have excess cash, because the aim of the game and the strategy is to increase the long-term the shareholder value and the profit. So if you have excess cash, you can use it to increase your shareholder value. Although this is being done in the later rounds of the game because you can repay the loan, you can come into the equity page and repurchase So you can repurchase your company shares. You can repay debt, which will improve your debt to equity ratio, and this will increase your shareholder value. You can also see that here we have the dividend page. You can also pay dividend, and you can also come here and invest in the investor PR, because investor PR, if you invest in the investor PR, this expense will keep the investor informed and updated on your company shares, and this will improve your firm profile among investors, because you see where we have the PR ratio, the PR index, the PR index will be raised. To determine your finance position last year, you can check on the cash flow. So no, sorry. So I can just say no. So let me just check on the cash flow, because you can check on your cash flow. So this will give you your financial position, because you can see here I have my ending cash balance is 22 million. And also you have these other finance reports, like we have the income statement. You can see it here. We have the balance sheet. You have it here. We have the, yeah. Then also the cash flow. We have this cash flow budget tool, which will show your estimated cash requirements in the first month of operation. You see here, I'm being told that I have enough money to cover my first month cash flows. So this is it. So something that you have to watch in this MikesBikes simulation in the finance segment, with your debt to equity ratio, just look at your debt to equity ratio. So let me show you where it is. So it's in finance, my debt to equity ratio. If you have too much debt and you don't have enough equity, this will negatively affect your shareholder value. So ensure you are keeping in check your debt to equity ratio. So that's it for today, guys. Thank you for watching and have a nice time.